Peter Rose, Longwood Currency Trading. You know, I made a quick $900 between flights on our way out to Chicago recently. We're going out on a vacation. And I wanted to just say that success in currency trading is really just all about understanding the probability that price momentum will continue. I mean, that's the key to the thing. So anyway, here we were sitting in the Baltimore airport waiting to board our continuation flight into Chicago. And I could see the beginning. I was watching this thing on my phone. I had the thing pulled up. I don't trade on my phone, but I did this time. It's the only time I did. I check prices on my phone, but that's it. Anyway, I'm sitting in the airport, and I could see this price action beginning to build into what would become the catastrophic decay of the pound down to its 1985 lows against the dollar in a 2-day 900 pip flush out. It was I could just see it for me. I had to be part of it. I mean, I just had to get in there. I was getting on the plane in 10 minutes, and so I had to be sure that the momentum was right, because I was going to have to go in with some size, and I'd be out of contact wouldn't have any contact with the market for a couple hours until the plane landed in Chicago. And again, it's all about understanding the probability that price momentum is going to continue, and not to be too greedy about the number of pips that you're trying to get. I wasn't trying to get 40 pips to make $900. It was shorter than that, but that I had to go in heavier. But the downside to that is that if I got it wrong and I waited 2 hours, I could have been thousands of dollars upside down, because I didn't want to set a stop, because I knew that the volatility was going to be really high. I just knew where the momentum was going to go. I didn't know where the momentum was going. You can never know that. So it all worked out. I landed in Chicago, brought the trading platform up, $900. Terrific, great. I'm a hero. But I'm not. I just played it right and figured it out right. By not wanting to continue to trade on my phone, because I don't trade on my phone. I'll use the phone to check prices and stuff, but if I want to trade, I'm going to go get on my desktop, and I'm going to work that. So here I am in Chicago for a week, and I'm not going to trade. I'm not going to sit there on my phone and trade. And besides, it's vacation time. I cautiously but realistically suspect that not trading for that week during this 900 pip debacle with the size that I trade probably cost me $45,000 in unrealized profits, because I didn't trade. And that's okay, because trading is a tool to make you some money so that you can enjoy your life. You can't get wrapped around the axle. Just as the gamblers say, the dice are being thrown somewhere in the world all the time. And so whether the momentum is projected to be 20 pips or 2,000 pips, it doesn't really make any difference. If you're not ready to trade, you don't feel like trading, you just sit on your hands and don't trade. And if you miss the big move, that's okay, because there'll be another one. When I got back home after that trip, we landed, we got back to the house kind of late, early evening. I looked at the trading platform, the prices, and I saw an opportunity there. I got on board that and did a carry trade. And again, I don't like to do carry trades because they go rapidly against you, as this one did. But when I got up in the morning, I made $5,000, a little over $5,000, and went on later during the day. I guess the whole campaign from the $900 that I made in Baltimore through after I got home a couple of days was about $11,000. So I missed out on 45, but I made 11. I made 25% of that. But the volatility was causing my positions to go underwater substantially. Look, if you're going to trade during high volatility times, you can't put a stop on because you're going to get pegged out because the market is acting irrationally. Now you would say, well, the market is irrational anyway because of the players that are involved, and that's very true. But even in total chaos, there's total order. And so that's where the momentum, judging the momentum, comes in at. And so I'm running these trades and watching them, but there's no stops on. And I don't advise doing this. I've made enough money this year that I could lose 20% of my account and it'd still be okay. So for the year's profits. So I'm willing to take those risks because I have a good sense of the momentum. I get it wrong, just like everybody will get it wrong. But I get it wrong less times than I get it right. And when I get it right, I try to really push the envelope for the bank size that I have to try to make as much money as I can because of the risks that I take that could take a substantial amount of that money away. I could lose a month's profit just like that at the size that I'm trading at. I've just gone from, doing 6 to 8 full lots to 8 to 20 lots size in the last 3 months, and so I haven't built up quite the bank size yet that I would like to have of earned profits for the year that I could take a $20,000 or $30,000 hit, and that wouldn't just really flatten my ego really good. Corresponding to that, with the volatility that's going on, I'm not going to be able to get the big gains that I'm looking for unless I'm willing to take the big risks. So I can't hide in the weeds by taking short stops, as I say that is mandatory that I do when I trade. If I'm trading under normal conditions, we're in historic times right now. And I'm so thankful that I have the skills and the ability that I'm going to be able to take advantage of these times, and hopefully get through them on the plus side. Because as former pit trader Joseph Gibbons says, I quote him all the time, it's such a wonderful quote, it's not how much you make, it's how much you keep. And so I'm telling you all along here, well, I've made this amount of money, I've made that amount of money, I've made this amount of money, and when I've lost, I've told you that I've had losing days, and I've lost. And a couple of times, $4,000 days. I've only had 2 losers, let's see, a $4,000 loser and a $1,500 loser, I guess. I forget, I don't know. It's gone, it's history. But so far this year, this is early October of 2022, I've had 2 losing days to the tune of about $5,000 or $5,500. So my intuition and my understanding of price momentum is valid. Now, do I want to take these big risks on a normal basis? No, I don't want to do that. Even though I'm going in my entries with what would be considered large size for most, it's maybe, you know, 10% or something of my bank size sometimes. I figure I'm going to do short stops and I'll get tagged out 3 times or maybe 4 times, and then I'll hit the big one. And so when I hit the big one, I've got to really make up the money, the dollars, not the pips, but the dollars, through a structured staging process and carefully managing that position as price continues to move on. And managing the position consists of, when you're staging, making sure that your average price hasn't crept up to close to where your current price is, so that a quick puke on the price action doesn't take you underwater. It's very it takes a lot of expertise in order to do that. And the only reason on this channel that I talk about doing stuff like that is to make you guys that are in your 4-figure to low 5-figure accounts, and you're scrambling through and you're trying to figure out how to make this stuff work. I'm telling you how to make that work, but I'm also explaining to you what you have to do when you get up into the larger dollar sizes. You won't be able to do this stuff that I'm talking about when you get to the larger dollar sizes if you don't follow my advice in the smaller dollar value accounts, where you're going all in, all out with your positions. Well, what are you going to do? You're going to take too many accounts and stage them in, or 3 full lots and stage those in a series of minis. No, you don't want to do that. If you got 3 lots and you want to trade them, you trade them. You go 3 in and you come 3 out, and you learn how to do that trading. If you're not successful, it means that your win-to-loss ratio is not good, and you need to look at that. If your win-to-loss ratio is good, if you're winning 70-30 but you're still losing money, it means that your average winning value is too low. You're probably not letting your winners run. You're probably not getting as much as you should for the winning trade. You can't just say, oh, I've got a profit target of 10 pips, and then when it gets to 10 pips, boom, you're all out. You can't do that. You got to get to that 10 pips and be willing to give up 8 of those pips if it turns around and goes against you. You bring your stop up, so you got a 2-pip profit, and you're just going to let it run beyond that 10-pip profit target and see what happens. If it gets to 20 pips, you can bring it up to 10 pips, so that you've got a 10-pip buffer there between where your average price is and where the current price is. But to try to do anything fancier than that is not what you should be doing within the first couple of years of your trading, unless you're under somebody's guidance and you're able to run ideas past them as you mature through. I think that someone who would run through my course and do the consulting, it's consulting, it's not a course, it's a consulting process, over a 3-month period of time. If you have little experience, you could be up and trading a full lot account. If you've got a lot of experience, I'd still start you from the beginning, orientations of all in, all out, trading 1 mini lot, because I'd have to be sure that you're on the right track in order to get that, how I view advanced trading techniques, so that you don't get your bowels in an uproar when you're faced with a situation in high volatility and large pip moves. You'll freeze. You won't know what to do. But if you've got some experience, you'll be able to get through that material maybe in a month, I would think. And you could get yourself up, if you've got enough money. You could be running a $30,000 or $50,000 bank, trading 3 to 5 lots or 8 lots. I don't know what your capitalization requirements for the country that you're trading in are. I wouldn't be trading 2 under 1 or 100 to 1 anyway, And I think if you follow the guidelines for the United States, which is 5% down to take the trade as margin, and then 50 to 1 on leverage to hold the position, I mean, I think those rules are there to protect you, and that's how I would work with you. And I mean, you can do it on your own. You can learn how to do it on your own, but you have to step back and look logically at what it is you're going to be faced with and accept the fact that that's advanced level material. You're not going to drive an oil delivery truck with 3 months of driving experience in your little Pinto or Kia or whatever it is that you're driving. You got to get a CDL, you got to get hazmat stuff. I mean, sure, you want to push it, you run that oil truck into a light pole and you'll blow up the neighborhood. So let's just be realistic about the currency markets. What are you going to do? Put $50,000, $100,000 into your account? You don't know what you're doing. You're going to lose $50,000 or $60,000 of that 100 in very quickly. Oh, that's what happened to me. I lost $40,000 when I opened my live account after I get done messing around and wasting my time in a simulated account. And it didn't take long for that $40,000 to disappear, even though I was making 15% a month for 5 or 6 months on end in the simulated account. And listening to these fools on these videos and taking these baby courses, oh man, it's just, you have to be able to separate the stuff that you're supposed to be doing and learning in getting your structural foundation of your trading plan squared away, as opposed to what you're going to be able to do when you get into more complex situations. And so just bear in mind that as I'm talking on my videos, I'm trying to give you encouragement. This thing about me making $900 in a couple of hours, making a trade on my phone in the airport, that isn't anything that you should be even thinking about doing. I tell it because that's what I'm doing, and that's what your potential is if you learn this stuff the right way. If you don't learn it the right way, you're going to be in trouble. And in the position where I'm in trying to get as much mileage out of this extreme volatility. I mean, the price has fallen 900 pips in 2 days. There's been a several hundred pip retracement to that. It's come back down 200 pips. It's all over the place. And so I'm trading totally differently based on a trading plan designed specifically for this. The danger is in the way that I trade, going just really maximizing my positions early on, is that it's very likely that I will take an inordinately large hit sometime during this process in trying to really maximize the gains. If all I do is break even over the long run, I mean, that'll be fine because I will have fun. I hope I don't go permanently negative on something, but these are the things that you have to be willing to do if you want to make the big money. And so I'm at a point where I've got a lot of money in my account. I'm trading over 6 figures in the account, or solid 6 figures in the account, and I'm trying to grow that. I've got about on risk, I'm 70% up on risk in 7 months of trading. So and that was trading 3 and 6 fulls early in the year. So in taking these larger risks and looking at these larger drawdowns based on a huge bank size being traded versus just 3 months ago trading 3 and 6 fulls is very challenging, because when you lose 3 weeks of what you were trading during the 3 to 6 lot stage. I mean, look, if you're trading at $200 a pip and you lose 20 pips, that's a lot more than you made making 20 pips 10 times on a 3 full lot, right? So trading 30 bucks a pip. So it's a balance, and you have to understand what that balance is. And until you understand what that balance is, you better not be shoving it all to the middle of the table, any more so than you would be doing that in a poker game. And so I don't tell you what I make to tell you how good I am or anything like that. It's to provide incentive for you that you can get yourself to the point where you can be making significant money, more than replacing your yearly income, your job income, but you have to do it the right way. I hope my videos and the material that I present in these videos helps you achieve that. That's my purpose for this channel. And I don't tell you to trade the way that I do. That's why I don't really tell you how to trade. I tell you what to do, but not how to do it, because how to do it really has to be up to you. If you want to do consulting with me, then we're going to share not only the what, but the how and the when, because that's what you're going to need in order to be successful. And there's lots of people out there that are showing you how to do it, but they're not showing you when to do it. And that's the key of the trading. And that when component has a lot to do with the momentum and being able to judge the momentum of price action, which you're not going to be able to do, number one, when you don't have a lot of experience, when you don't have 300 or 400 trades under your belt. And number two, until you, until you're trading a large size account where a hit against that account will cost you a lot of money. Then you learn what not to do. As Jesse Livermore said, when you learn what not to do, you learn what you can do, and then you've got a good win-to-loss ratio, you got a good average win value, your per trade expectation value is really good. Boom, you're all set. You can make as much money as you can possibly imagine. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.